Subscribe to our channel and press the bell icon to get the latest notifications.
Hello friends, welcome to our channel. In our series of Question of the Day, I, Mayank, bring to you another important topic which is very recent and hence very important for many upcoming government exams for which you all are preparing. So let's move to the question of the day and then I'll be explaining this important financial topic. So let's move to the video. First is question of the day. So for today, the question of the day is, which of the following is correct about third quarter GDP for financial year 2018-19? So, before I read out the options to you, I want you to know that recently the report was announced where the third quarter GDP. By third quarter, I mean the GDP which was from September to December. So we can call it the December quarter also. So in the third quarter GDP of financial year 2018-19, there were certain things which were must to be noticed. That is, first there was a decline in the GDP growth rate. So before I explain to you how the decline was, what were the factors responsible, what were the authorities steps which were taken and why it happened so, and how it was different from the previous quarters. So all these questions which might be coming to your mind just by reading this name, all will be answered in the video ahead. Firstly, I'll be reading out the options to you and may helping you to understand them. Then we'll be discussing the topic, and by the end of this video I'll be discussing the question reply to question of the day, so that you understand what the topic is and what type of question can come in the exam. So the option to you is, first, it was below expectation as per CSO prediction. So we just discussed whether it was true or not. I believe that you might have an idea by the previous thing which we discussed. Second, major deterrents of GDP rate were private final consumption expenditure. Now, private final consumption expenditure, those of our viewers who want to know what this basically means, don't worry. I am going to explain the proper definition to it. But for now, can just say that it is something related to the consumption. So, private final is basically a person or a normal household's consumption, and second was investment growth. So, investment is basically the government spending on the infrastructure and all on the factors which help to build the nation. Next, it was 6.6% for the as per the CSO report for December quarter. By December quarter, we mean third quarter only. Next is fiscal deficit could be curbed or could be reduced by the government due to low spending. So low spending can help the government in reducing fiscal deficit. How correct is that or not, in line with the fact of third quarter? So just by reading this statement, you can pause the video and give your answer to the question. Now moving to the topic. So the topic for this is that how the third quarter GDP growth rate was and what can we expect from it. So before I discuss that factor to you, let us just begin the story by understanding that what was the rate and how the problem started. So when the report for GDP third quarter GDP growth rate came out, clearly the organizations and the predictions were not as per what the reality was. So when the report came out, the report stated that the GDP has slipped down. Slip down means to fall. So it has clearly stated that it has fallen to 6.6%. So remember the figure, which is very important for your exam. 6.6% was the rate at which the GDP for the third quarter was. Now the economy grew at 7.1% in second quarter. So just by going back, if I say about the second quarter, which was from July to September, the growth rate was 7.1%, and in the first quarter, which was from April to June, the growth rate was 8.2%. So clearly you can see that 8.2% and 7.1% were clearly higher figures. So it has fallen for in the third quarter. Overall, a 7.6% growth for the first half. First half, I mean that first 6 months, which is first two quarters, has been lodged by CSO, which is 7.6% growth, which is quite a good number for our economy. Now, since we have just discussed that what happened in the first and second quarter, and now what happened in the third quarter, we must get into a bit of detail of what was the reason that there was a decline in this and what was the reason that there was a change in third quarter. Before I just tell you that what happened in third quarter, we must know that what was the reason that predictions went so wrong in this time. The predictions were so wrong this time because in the previous two quarters also there was a minimal difference on what was actually the value was and how it was reported. In both the previous quarter there was an overestimation of GDP. So by overestimation I mean that more than what was the actual GDP it was reported. So just going back to the previous part, that I mentioned that the economy grew at 7.1% in second quarter. However, later reports were revised and it was noted that it was just 7%. And as far as I talk about the first quarter, where it was reported that the growth rate was 8.2%, so it was actually revised and stated that it was not 8.2, it was just 8%. So you can see that in both the quarter there was overestimation as we discussed. So remember this and see it in a logical manner. If you are estimating on the basis of first and second quarter where the estimates themselves are not showing the true picture, and on the basis of that if you predict for the third quarter, how can you be sure that the third quarter will be correct? If your first and second quarter reports are overestimation, then your third quarter report will also be an overestimation only. So here this is what only happened here. There was predictions of something related to 6.8% maybe. However, the actual GDP showed a even decline of 6.6%. So you can see that there was continuous overestimation of GDP going on. What was the reason for this? There were two notable reasons for the divergence. By divergence, I means that the discrepancy in between what actually was there and what was reported. There were two main reasons behind that. First is that the private final consumption expenditure. This term was there in the question of the day also. Private final consumption expenditure is basically the final consumption expenditure of households and non-profit institutions which serve the household. So by private final consumption expenditure, I mean that expenditure which the people expend or which the household spend on durable, non-durable goods, as well as the self-imputed cost of goods which they might have incurred. So it takes into account those costs as well which the people might have incurred if they have borrowed the good instead of using it on their own. So those costs, those imputed value costs are also included in private final consumption expenditure. The report states that there has been an upward trend. So the expenditure was seen that it was expected or reported to be 6.54%. However, in reality, it was more than that. It was 8.3%. Also, the second factor, which is investment growth. So by investment growth, I mean the increased in expenditure by the government was also reported to be lower. So it was overestimated from 12.2%, but in reality it was just 10%. So you can see that these two factors were so contrasting that one was overestimated, that is government expenditure, and the second was underestimated, which is private final consumption expenditure. Now what happened in third quarter was there was a complete turnover. In third quarter you will see that the government spending rose. However, the people demand for goods declined. There were certain factors behind that, so we'll be discussing those factors in the topic ahead. Just remember that how the momentum shifted from increased public demand and lower government spending to lowered public demand and higher government spending in the third quarter, and that's why it becomes really important to discuss this quarter report in this video. Next is role of RBI. RBI is something which is very important in all the government financial policy schemes, and here also it has played a certain kind of role which is important for us to understand. Now RBI is the central bank of the country, we all know. In the recent video which we made about bi-monthly monetary policy scheme which by RBI, we discuss in detail what RBI decisions had been for this bi-monthly report. However, I'll just be taking a cue of a term from this report and will be explaining how it affected the third quarter GDP growth rate. So you must have seen the video, and I believe that you remember that the government RBI has cut the policy rates by 25 basis points. So by 25 basis points, what basis point is something which we clearly discussed in that video, but I'll be saying that it is something as a measure of unit. So the government or the RBI RBI has reduced the policy rates by 25 basis points, which led to lower repo rate. Now, repo rate is what the rate at which the RBI lends money to the commercial banks. So, if there is lower rate at which commercial bank get the money, so they'll be actually providing money to the people also at a lower rate. Since the interest rate has been reduced, it was actually to encourage people to take loan and do the investment activity. So it was done to increase the public spending in the third quarter. Secondly, RBI pegged the GDP growth rate at 7.4%. So clearly a huge overestimation on the part of RBI about the third quarter. Thirdly, that there has been a key interest rate changed its policy to neutral from calibrated lightning. So by this I mean that the interest rates had a certain tendency. In some patches they are highly volatile, while in other periods they are quite stable. So RBI clearly changed its policy from calibrated lightning. By calibrated lightning I mean the period where interest rates are highly volatile. By this I mean that there was a period when when the rates were highly fluctuating and there were chances that rates might go high in a short span. This discouraged the people to take loans to invest money in long term projects as there were no guarantee of the interest rate. However, the government or the RBI decided to shift its policy from calibrated lightning to neutral. Now, neutral is a state where the interest rate are quite stable for a long time, and it encourages people to take loans and gives an incentive to borrowers to give money at a certain interest rate as the interest rate will remain there for a long period of time. So this was something which can help in the long term project investment. So clearly RBI tried to create an atmosphere of stable interest rate to increase people spending. Now the other organization in the picture is CSO. CSO is called Central Statistics Office. We just discussed in question of the day that this is some organization. Now let us understand what it does. Yeah, you must be thinking that we said about GDP estimate, GDP growth. So who does this? Who calculate what will be the GDP? Is it the RBI? No, is it not? It is not RBI. It is CSO who does it. RBI is just the central bank. CSO is the authority which use all the statistical tools to actually draw drafts and predict the GDP growth rate. Their reports are in fact a impetus to the government to design the further policy and also help them in budget framing budget. What was CSO? CSO is something which is an organization which is responsible for drafting estimates about the GDP growth rate. What it does is it basically predicts the report on quarterly basis, and based on these quarterly trends it predicts how the annual growth rate of the GDP will be. And definitely as the reports are being revised, the annual growth rate also is revised by the CSO time to time. So let's read what is written here. Based on CSO's first advance estimate. So first advance estimate is basically the first report. GDP is expected to dip sharply. So they predicted that the dip is going to be there, but they were expected that it will be around 6.8%. However, in reality, it came down to be 6.6%. And for financial year 2019 from 7.6% in the first half. So in first half, which is accumulation of first two quarters, there was expectation of 7.6% growth rate of GDP. However, in the third quarter or the second half, there was estimation that there is going to be a dip. Now we understand, we have been following the story clearly, and you must be thinking that we have been talking about authorities, we have been talking about terms, but what actually led to their decline is still a question in our mind. So other sectors, why I'm saying other because the primary two reasons have been discussed in previous two parts, which is investment and private financial consumption expenditure. Now I am going to just classify the sectors where there was a sharp decline in this period, which led to the result of such a slow or a low GDP in this quarter. First is agriculture. So we know India is an agrarian economy, and the mostly the consumption expenditure of public is actually traced down by how the rural households or how the farmers are spending. So here also the picture shows certain some kind of that only. So in agriculture sector we see that there was a sluggish growth in the MSP or in the minimum support price. So since there was sluggish growth in the minimum support price, the farmers were not getting enough output or enough money in their hand. As the farmers were not getting money, there was lower demand on their part. Simply see this, that if a person is not having money, how can he demand goods which he can't purchase? So if there was low money in their hands, there was low demand also, lower private consumption expenditure also. So remember, I told you how the momentum shifted from high consumption expenditure to low. So it was this, because of this, that farmers were having low money in their hand, because of which they were not demanding goods, which resulted in lower consumption expenditure. So as they were demanding lower goods, the consumption expenditure fall, and also the gross value added for the agriculture sector, which is the backbone of the economy, was 2.7%. So the agriculture output for this period was expected to be 2.7% in comparison to what it was earlier. So earlier it was 4.6%. So you can see that on year on year basis, the same quarter in the previous year showed an output growth of 4.6%. However, now it has just declined to 2.7%. In another industry, the growth rate came down to be 1.2%. So it was 1.2% in mining industry, which is also an important sector of the economy. So this 1.2% in the mining industry was in comparison to the earlier quarter. In earlier quarter, it was 1.5%. So from 1.5%, it came down to 1.2%. You must be thinking how we calculate about mining industry. So mining industry is basically, the indicators of mining sector include the production of coal, crude oil, natural gas. So all these factors combine give an output for the mining industry. Next industry was manufacturing industry. Here also we were disappointed, as the mining manufacturing sector showed a slower growth. Manufacturing sector basically had a gross value added of 8.717%, to comparison to 5.9% in 2017-18. Next was that electricity, gas, water supply, and other utility sources. So electricity, gas, these are something which are basic necessities of people, and is also a major source of revenue for the government. So gross value added was also reduced to 8% compared to 8.6% earlier. So it came down to 8%, and earlier it was 8.6%. So here also a decline of 0.6%. So next was construction sector. So in construction sector, there was certain percentage of increase also. Overall, we see that most of the sectors are on a decline. So now coming to the question of the day, as you can see on the screen, that all the 4 points which we discussed are correct, in line with the GDP for financial year 2018-19. So we see that below expectation of CSC prediction. Yes, we clearly discussed that CSO predicted it to be 6.8, however it was just 6.6. Major deterrents of were private final consumption expenditure and investment growth. We clearly discussed that these two were major factors of decision in investment growth, and their momentum shifted, which resulted in decline. Next was, it was 6.6%, correct, very correct. It was just a fact, so we don't need to explain it much. And fiscal deficit could be curbed by government spending. Yes, the government, since the elections are coming, is keen on high investment growth, and thereby the decline in nominal the rise in nominal GDP was something which can help the government to curb the fiscal deficit. So I hope that you could understand all these points. Now, before ending, I would like to thank Mr. Sumit Mehra, because he has been regularly mentioning about our videos and has been appreciating our work for a long time. So we thank you for your inputs and for your appreciation. It is quite valuable for us, and we hope that we provide such good question of the days to you in upcoming time, so that we help you to understand topics which are important for many government exams and help you to clear those exams. So don't forget to subscribe to our channel. In case of any queries, comment in the comment section. Write your comments in the comment section. Also, don't forget to press the bell icon to get the regular updates from our channel. Thank you so much.